In today's show, I'll be breaking down the latest Bitcoin technical analysis, as well as Coinbase argues for spot Ethereum ETFs as analysts warn of concentration risks. Also, Sam Bankman-Fried is back in court, waives conflict of interest for his lawyers. Also, breaking news from the ECB, spreading FUD, says Bitcoin has failed on its promise, its fair value is still zero and causes environmental damage, yada, yada, yada. I'll be sharing the responses from Plan B and others. Obviously, they're feeling threatened by Bitcoin because Bitcoin kills the central banks. We'll also be discussing a $150,000 Bitcoin price target on the table for this year in 2024. Send it, according to Fundstrat's Thomas Lee. Also breaking news, Max Keiser predicts a 1987-like market crash, foresees Bitcoin surpassing $500,000 per coin, and says Bitcoin ETFs, domestic miners, will get seized by the US government. He also shares that if they can do this to Trump, they can certainly seize Bitcoin held in Bitcoin ETFs and commandeer US Bitcoin miners. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Today's episode is brought to you by the one and only crypto exchange, PrimeXBT. Now, super cool. You can get started today in literally 5 seconds. All you need is an email account and you can deposit some funds. And you can also deposit funds with Visa and MasterCard very easily. And even if you don't trade on other exchanges for whatever reason, you're always welcome on PrimeXBT. My referral link is in the description right down below. By supporting our sponsor, you're also supporting the show. So I greatly appreciate that. Now, they currently have 30 plus crypto future pairs, leveraged from 1x to 100x, one-click trading mode, deep liquidity, and very high execution speed with very flexible leverage. My favorite part is saving on the fees. They have extremely low fees, only 0.01% maker fee, and only a 0.02% taker fee, and only a 0.01% funding fee. Some comparison, KuCoin standard fee is 0.1%, which is 10x higher than PrimeXBT. So the fees here are 5 to 10x lower on PrimeXBT compared to KuCoin, Binance, etc. They also have lots of bells and whistles. They were voted best platform for online trading and best mobile trading app. And they even have something called Copy the Expert Traders. So I highly encourage you to check out PrimeXBT. Use my referral link exclusive in the show notes below the video and take advantage of up to $7,000 in bonuses. And let's get this crypto, shall we? But anyways, family, if you're new to the channel, be sure to smash the subscribe button to receive daily premium crypto news alerts every day. Just like this, also equally important to smash the like to help pump the stream. It helps out tremendously with the YouTube algorithm. Now, today is pod episode number 1559. I'm your host, JV, and today is February 22nd, 2024. Now, 22 is ultimately 11 times 2, so happy 1111, just saying. But anyways, family, welcome to the stream. Let's kick it off with our market watch, as we do each and every day, 7 days a week. As you can see, Bitcoin and the entire market pumping again, back in the green. Bitcoin is sitting at roughly 51,600 at the time of the live stream. Ether on the cusp of reclaiming 3,000, which we crossed the other day. XRP pulling back, while BNB, Solana, Cardano all breaking out and in the green. And checking out coinmarketcap.com, the current crypto market cap sits at 1.97 trillion, right on the back of reclaiming 2 trillion, and we got 77.7 billion in volume, 777. More good omens, family. Now, the dominance is sitting at 51.4%, with the Ether dominance back on the rise at 18.2% as the Ether price action continues to climb. And checking out the top 100 crypto gainers for the past 24 hours, we got AGIX, we got WorldCoin. I mean, WorldCoin's up 177% this past week. I heard they're trying to raise like $6, $7, $8 trillion. Sam Altman for their AI project. Very interesting. We got Render, we got Fetch, Filecoin, The Graph, Jasmy, Woo, and Axler. Now, which altcoins in particular are you most bullish on during this bull run? Let me know, family, in the comments right down below. And checking out the crypto bubbles to get a visual perspective on the day, you can see massive gainers. Ajax up 37%, Render 21, WorldCoin 36, Woo 15, GRT 17, HBAR 11%, FET 18%. So you can say it's been a hell of a week for the alts. And checking out the crypto greed and fear index, we're currently rated as 74 today. Yesterday was extreme greed with a 78, last week a 72, last month a 50. And checking out the Bitcoin halving countdown, we only got 56 days left according to this particular countdown clock. I had to switch it up for you guys. Ultimately meaning we're 96% roughly done until block 840,000, which is the scheduled halving date, scheduled to take place according to this one on April 19th. So where do you feel the Bitcoin price action is likely to go by the time of the halving? Let me know, family. Don't be a stranger.
Look, pump it up if your game went long. When the dip hit, you just stay like King Kong.
Let's go. Pump it up. But anyways, fam, let's break down today's Bitcoin technical analysis. Check out the charts where the Bitcoin price action is likely to go next. And massive shout out to Barack Monfils Evangelista. Greatly appreciate the super. Thank you for supporting the channel. Means the world to me. So yeah, let's discuss this. Bitcoin is due a pullback around its next block subsidy halving, but the timing currently remains unclear. In his latest video, we had crypto analyst Rec Capital predict the Bitcoin price action, copying the 2016 and 2020 bull runs. That's right. Bitcoin ranged within the narrow corridor for over a week with 52,000 acting as a resistance zone. While this has taken its toll on the sentiment as well as altcoin price performance, seasoned market observers maintain optimistic. That's right. Analyzing previous runs of all-time highs, Rect identified key phases common to both these market setups for the bull. Quoting him here, in the past, a macro downtrend break always precedes upside going into the halving. When we have a pre-halving retrace and then a post-halving reaccumulation period, then we go parabolic with the price action towards new all-time highs. Send it. And he shared a chart showing Bitcoin breaking its initial downward sloping trend line only to get caught in a resistance zone previously formed by it, breaking through and then retesting as support. The pre-halving retrace phase is what is missing in 2024 so far. We are going to have the same thing in this cycle, said Rect. The zone of interest when it comes to the pre-halving pullback lies at around 45 Gs, according to data from TradingView, as you can see here in the Bitcoin 1 month candle chart. The question is, are we going to retest this resistance this month in the pre-halving period? Because notice how we are never able to do that in the pre-halving period across time. And earlier, he concluded, Bitcoin fully entered its pre-halving run-up, now added the key price events were coming quicker this cycle than before. Now let's focus on a more of a bearish scenario for a sub 50,000 price level coming into focus, as of course, analysts are always divided. So I like to share both sides. Quoting celeb here, Franzen, Bitcoin is trading at the same exact price it was 7 days ago, fluctuating between 50,600 and 53,000 for the past 7 days, with 53,000 being the top. But the lowest daily close has been 51.6. I really don't understand the panic or the bear. Victory laps. And Matthew Highland broadly agreed, noting significance of the 0.618 Fibonacci from all-time highs just above 48,000, quoting him here, if 49,000 folds, then the picture changes, but consolidation and an uptrend favors a continuation of the uptrend. So there you have it. If 49,000 folds, we'll go lower, but it looks like we're not going to drop back down to 50 in my humble opinion, and I can be wrong, but we'll see how it plays out, family. Let me know your thoughts in that live chat. But anyways, fam, let's dive into our next story of the day and discuss the latest with the not Bitcoin, my bad, the Ethereum ETF, which is on a lot of people's minds right now. The headline reads, Coinbase argues for spot Ethereum ETFs as analysts warn of concentration risks. Here you go. The U.S. crypto exchange Coinbase, which is the largest exchange here in the States, has stood firmly behind Grayscale in its application to convert its Ethereum trust into a spot Ether traded product, which ultimately exchange traded product, with one of its key arguments being that Ether is not a security. Well, what would Gary Gensler have to say to that? On February 22nd, Coinbase's legal chief officer, Paul, shared the firm's 27-page letter outlining the legal, technical, and economic rationale from the SEC on why they should approve an Ether-based exchange-traded product. Coinbase made 5 major arguments, including that Ether is appropriately classified as a commodity, not a security, as reflected by the U.S. SEC's approval of ETH futures statements by SEC officials in court rulings. Massive shout out to Lock Sky. He just gifted 5 MicroStrategy memberships to the channel. So I want to say congratulations to Rocky Gould, Freddie Krueger, From Elm Street, DNA Noonan, Pharrell Fox, and Wayne G. You have all been hooked up. Welcome as a member of the channel, and please shout out Lock Sky for blessing you guys with the free membership. We greatly appreciate your support, Lock Sky. You're the man, family. Much love. Much respect. Back to our story. Moreover, the SEC had not objected to the CFTC's treatment of ETH as a commodity. Here's what they stated. Our letter lays out what anyone knows who has paid even the slightest bit of attention to the subject. ETH is not a security. He wrote on X before adding, in fact, before and after the merge, the SEC, the CFTC, and the market have treated ETH not as a security, but as a commodity. Additionally, Ethereum's proof-of-stake consensus has demonstrably strong governance that exhibits robust characteristics across ownership concentration, consensus liquidity, and governance, mitigating risks of fraud and manipulation. Now, I kind of coin it a different way, my perception at least, when they switched from proof of work to proof of stake. To me, it made it seem Ethereum was going to be deemed by the regulators a unregistered security because staking creates yield, and they targeted all the yield programs like the Gemini yield program, I think it was called Gemini Earn, and all the others. So it makes you wonder. Now, also, we have to think maybe the Ethereum founders are just working with the SEC, the government, the regulators, and who knows behind the scenes, and they may get a pass. You never know, because it seems BlackRock, Larry Fink, CEO of BlackRock, seems to get everything he wants, and he has already stated on TV that they're coming for the Ethereum next. So you tell me what you think. The letter's second argument states the SEC's approval of spot Bitcoin ETFs applies equally, if not more strongly, to an Ethereum ETP. Market data shows ETH ownership and trading activity are very dispersed, with high liquidity and tight spreads indicative of an efficient and mature market. Now, also consider ETH has been pumping, so maybe the insiders already know we could potentially get an Ethereum ETF later this year. What are your thoughts on that? Moreover, the ETH futures ETFs are similar products to spot Ethereum-based funds, so it would be arbitrary for the SEC to approve one but not the other, given their tight correlation, according to Coinbase. The firm also argued that the tech and operational security mechanisms inherent in Ethereum's blockchain significantly limits ETH's susceptibility to fraud and manipulation. Additionally, the asset's market depth, tightness, and spreads and price correlation across spot markets are highly indicative of a market that is resilient to fraud and manipulation. And finally, Coinbase noted it has sophisticated market surveillance to monitor trading on its platforms, and in agreement with the Chicago Mercantile Exchange, which is the CME. The letter was filed in response to a proposed rule change filed by NYSE Arca to list the trade shares of the Grayscale Ethereum Trust as an Ethereum ETP. The SEC procedurally requests comments on proposed rule changes to get feedback from the public before making a decision. And quoting Nate Gerasi, Coinbase now out here campaigning for a spot Ether ETF approval. Number one, ETH equals a commodity. Two, SEC approved spot Bitcoin ETFs, also approved Ether futures ETFs. Number three, ETH not susceptible to fraud and manipulation tech-wise. Four, deep spot ETH markets. And five, CME ETH futures market SSA. Love to see it. So what are your thoughts, family? And regarding this being a concentration risk, I'm going to quote, let's see here, Managing Director Andrew O'Neill, who stated, the participation of institutional custodians could reduce the current concentration on the Lido decentralized staking protocol. However, it may also introduce new concentration risks, particularly if a single entity is chosen to stake the bulk of Ether included in these ETFs. So there you have it, my crypto fam. What's your prediction? Ethereum ETF this year in 2024, yay or nay? Holla at your boy in the live chat. But let's dive into our next story of the day, an update from Scam Bankman-Fried. That's right. And also March next month is going to be his sentencing trial. But we do know they already dropped like 6 of the 7 charges against him. Maxine Waters blowing him kisses. We love you, Sam. You can't make the ish up. But anyways, here's the latest headline. Sam Bankman-Fried is back in court, waives conflict of interest for the lawyers. And I'm sure you guys saw the picture that was surfacing all across social media with his little gang in prison that was shared, I think it was 2 days ago. Former FTX CEO Bankman-Fried returned to the courtroom for one of the first times since his conviction to address potential conflicts of interest and his lawyers. According to a February 21st report from the Inner City Press, Bankman-Fried waived his right to conflict-free legal representation with lawyers Mark McCasey and Tori Young. The two attorneys filed notices of appearance with both SBF and former Celsius CEO Alex Mashinsky, who took similar action in a February 20th hearing. The courtroom appearance in the U.S. District Court for the Southern District in New York marked one of the first times Bankman-Fried had been seen outside of jail since a jury convicted the former FTX CEO of 7 felony counts in November of last year. SBF's life behind bars has been mainly out of the media spotlight, but on February 19th, photos surfaced showing the former FTX CEO with other inmates. And maybe if I click this link, I can just show you real quick in case you missed the memo. Let's see if I can find it. Is it in here? Did they put? Yeah, here it is. So yeah, SBF joined a gang in prison. This is crazy. So I think that lady Tiffany shared this. I guess she knew one of these inmates that leaked the photo, but you can see Bankman-Fried, definitely the most, I'd say, skinniest. He lost a lot of weight, but these other guys looking kind of jacked, at least the guy right next to him. But anyways, that was the photo of Bankman-Fried that just got leaked a couple of days ago and was sharing all over on X. So according to, let's see here, Inner City Press, these lawyers, in contrast, we now have Christian Everdell and Mark Cohen, who represented the former FTX CEO at his criminal trial. They're going to withdraw. Bankman-Fried is scheduled to appear before Judge Lewis Kaplan for sentencing March 28th, roughly a month out, fam. Bankman-Fried, once considered by many the golden boy of the crypto space, the Michael Jordan of crypto, stepped down as CEO of FTX in November 2022. The firm filed bankruptcy. As we all know, the rest is history. SBF was held in custody in the Bahamas until his extradition in the U.S., where he was later charged and convicted for fraud related to the handling of funds between FTX and Alameda Research. Yeah, so he lost $10 billion of investor funds. Good Lord, I think it was the biggest fraud in human history. After his October 2023 trial, SBF was initially expected to face 5 additional felony charges in March, but reports from December suggest the prosecutors plan not to proceed. I wonder why. With the second trial citing public interest, Bankman-Fried's defense team is expected to submit sentencing recommendations by February 27th. So the $1 million question, I guess, becomes, what do you think his punishment is going to be? And do you think he could potentially get pardoned by the likes of a Joe Biden, who he was the second largest donor of for the Democratic Party when he ran? I think number 1 was Soros, number 2 was Bankman-Fried. Let me know your thoughts.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best.
You already know, family. But anyways, let's dive into our next story of the day. We still got a lot to share. We shared the latest with the SBF update. Now for the big story with the ECB FUD, which kind of shocked me when I read this. I'm going to start here with what Balchunas tweeted. The European Central Bank woke up and chose violence, says Bitcoin has failed on its promise, its fair value is still zero, causes environmental damage, and is a market for snake oil salesman, says ETF rally is just a dead cat bounce. And yeah, that's mind-boggling if you're to ask me. So I responded, wow, FAC, the ECB, who actually cares what they think. Bitcoin makes them obsolete. And I'm actually going to read the actual article published on the European Central Bank website. This is not a joke. They're actually being real here, which is mind-boggling. Plan B responded, the European Central Bank is literally run by a fraud-convicted criminal, referring to Christine Lagarde. Bitcoin is recognized by the largest global asset managers like BlackRock and Fidelity as the best performing asset. ETFs give investors better access to this superior asset, regardless of central bank FUD and lies. And here's the receipts. This is an article published by The Guardian. Christine Lagarde avoids jail, keeps job after guilty verdict in negligence trial. I wonder why. And in this independent headline, it says Christine Lagarde convicted, IMF head found guilty of criminal charges over massive government payout. That's because you need to know the higher they are, right, the more corrupt they are. All of these mofos are criminals. The Jamie Dimons, CEO of JP Morgan Chase, the Janet Yellens, the Gary Genslers, the Jay Powells, just saying. But the best part was the fact check corrected the FUD from the European Central Bank. And so let me show you the actual tweet. They wrote, Bitcoin failed to become a global decentralized digital currency, instead falling victim to fraud and manipulation. The recent approval of the ETF doesn't change the fact that Bitcoin is costly, slow, and inconvenient. And check this out. Number one, Bitcoin is not preferable for criminals. Fiat is, like the euro and dollars. Number two, Bitcoin is an open monetary protocol that is the centralized store of value. Number three, the euro is losing its purchasing power against Bitcoin constantly. Number four, Bitcoin is good for the environment. So take that, ECB mofos. You know what I mean? And in fact, why even give them the benefit of the doubt? I'm not going to read their story. I'm just going to read one of the quoted from their story that Balchunas pointed out. On January 10th, the U.S. SEC approved spot. This is coming directly from the ECB. They approved the ETFs for Bitcoin. For disciples, the formal approval confirms Bitcoin investments are safe, and the preceding rally is proof of an unstoppable triumph. We disagree with both claims and reiterate that the fair value of Bitcoin is still zero. For society, a renewed boom-bust cycle of Bitcoin is a dire perspective, and the collateral damage will be massive, including the environmental damage and the ultimate redistribution of wealth at the expense of the less sophisticated. Can you say they're scared? I love it personally. That just shows their hand that they're perceiving Bitcoin as a direct threat, because the reality is Bitcoin separates money from the state. And as Max likes to say, Bitcoin kills the state. So let's get it, family. What are your thoughts with the ECB FUD? But anyways, fam, let's dive into our next story of the day. Discuss this bullish $150,000 Bitcoin price target by Tom Lee. And that's for this year in 2024. And then we'll dive into the ETF endgame and the latest from Max Keiser, talking about the US government seizing the Bitcoin miners in the Bitcoin ETF BTC and his $500,000 price prediction he recently shared. So pump the likes to pump the stream. Welcome everyone on the show, and shout out to the mascot in the background doing his thing, the one and only Nipponata. Yeah, man. So yeah, the headline reads 150,000 Bitcoin price target on the table for this year, according to Fundstrat's Tom Lee. Here's why. Fundstrat's Tom Lee says a myriad of positive catalysts are setting up to most likely push Bitcoin to much higher prices by the end of this year. In a new interview on CNBC, he says the looser monetary policy, the Bitcoin halving, and the decreased demand stemming from new spot Bitcoin ETFs are putting upwards pressure on Bitcoin. Lee says 150,000 per coin is not out of the realm, a possibility for this year. Quoting him here, I think it could be as high as $150,000 this year. Send it. Let me know if you agree or disagree with him. Because you have got demand improving with the ETF, and you have the supply shrinking with the halving, and if monetary eases, which we expect, that's supportive of risk assets, and Bitcoin's holding up. It is another reason why I don't think a drawdown is going to start that soon. I mean, Bitcoin's been rallying the last couple of weeks. Preach. Lee also notes that many of the popular criticisms of Bitcoin are not founded on solid ground, such as the idea that it's used by criminals or that it's a weapon of choice for fraud. That's right. We know it's ECB fraud because, again, Bitcoin separates money from state, and then Bitcoin kills the state, and they don't want to be killed. Bottom line, quoting him here, it is sound money, and I think it's proving to be useful. It's been a great store of value, the greatest. It has been a good risk asset, the greatest. It's also incredibly secure, the securest. There hasn't been a single fraudulent entry on the blockchain since its inception. Let that sink in. I don't think any bank can say that is true for their profits and loss and accounting. 6% of banking transactions are suspicious, 0% on the Bitcoin blockchain. Preach. And to watch the interview Thomas Lee did projecting 150,000 this year on CNBC, check the show notes below the video in the description. Now let's dive into our featured story of the day and discuss the ETF endgame. As per Max Keiser, he predicts a 1987-like market crash foresees the Bitcoin price surpassing $500,000 per coin. Send it. And he also says that the Bitcoin ETFs and domestic miners will get seized by the US government. That's right, as you can see here in this headline, but I actually want to start with some tweets. The other day, breaking news, New York Attorney General says she may seize Trump's buildings and assets if he can't pay that fraudulent $355 million penalty. Max responded, if they can do this to Donald Trump, they can certainly seize Bitcoin held in Bitcoin ETFs and commandeer US Bitcoin miners, self-custody or lose it. Now, sage advice, and I must point out that Bitcoin ETF is not equivalent to self-custodied Bitcoin. One of them is confiscatable and the other is not. If you trust your government, you don't have to worry about that. However, I would say if you're a Bitcoiner, you more than likely lost trust in your government decades ago. What are your thoughts, family? Now, as I wrote here in response to Max Keiser's tweet, but let me read the tweet first. This was off the back of the tweet from the Kabisi letter. So we'll start here. This was posted yesterday, February 21st. The top 10% stocks in the US now reflect 75% of the entire market. This by far is the most concentrated stock market since the Great Depression in 1931. In the dot-com bubble of 2001, concentration of the top 10% of the stocks peaked at 72%. Even prior to the 2008 financial crisis, concentration of the top 10% of the stocks peaked at 66%. On average, the top 10% of the stocks reflect 64% of the entire stock market. Is a correction overdue? Can you nod your head? Hell yes. What are your thoughts? So Max tweeted, 1987 style crash coming. Bitcoin, the ultimate safe haven, will soar past 500,000 per coin. 500,000 biddy. Send it. Gold will continue getting demonetized by Bitcoin. Bitcoin ETFs and domestic Bitcoin miners, meaning those in the US, will get seized by that US government, which everybody loves, right? Not. 1 million middle and upper class migrants will flood into El Salvador. So there you have it. The high priest has spoken. I responded off the back of Max. $500,000 Bitcoin. Send it. Agreed. U.S. government will seize all the Bitcoin ETF because they are corrupt mofos and they can get away with it in the name of national security. Remember, folks, Bitcoin ETF is not self-custodied BTC. There you go. He also wrote there was a limit on central banks debasing a country's currency without hyperinflation until all the central banks started debasing simultaneously to transfer global wealth to the neo-feudal class. Then, February 2022, Russia said, no more. Got Bitcoin? Well, do you? Let me know, family. But now I actually want to read you this article on the back of what Max Keiser predicted. So here we go. Max said in the tweet, as I read to you, 1987 style crash coming. Bitcoin, the ultimate safe haven, is going to soar past 500,000, while gold will continue to be demonetized by the apex predator, BTC. The media personality also suggested that the Bitcoin ETFs and domestic Bitcoin mining operations might face governmental seizure in the US. As I pointed out to you, Max then made a projection about El Salvador, visualizing a scenario where the country would become the sanctuary for a wave of 1 million middle and upper class migrants. 1 million middle and upper class migrants will flood into El Salvador. What are your thoughts on that? Shout out to Max for being an ambassador to El Salvador. His tweets were in response to the report highlighting extreme market imbalance, which I read to you from the KBC letter, which showed statistics. The top 10% of the stocks in the US are currently reflecting approximately 75% of the total market value. What can go wrong there? This level of concentration has not been seen since the Great Depression. Facts, with Keiser drawing parallels to the dot-com bubble and a period leading up to the 2008 financial crisis, which is what birthed Bitcoin and the Genesis block in 2009. It was the 2008 financial crisis. So shout out to Satoshi. Why it matters. In a follow-up tweet, Keiser alerted his followers to brace for a severe market meltdown, evoking the memory of Black Monday from October 19th, 1987. So JV here was only 4 years old. How about you guys? The dark day when the markets plunged, erasing 1.71 trillion in value globally. So there you go, man. I mean, doom and gloom. I know some of you guys, they're not really going to seize any Bitcoin, but I think the bigger picture is, what if they did in the name of national security? Because you know they have the right to do so. If you read the fine print with the ETFs and with Coinbase, currently Coinbase is custodying over 1 million Bitcoin, meaning Coinbase ultimately has as much Bitcoin as Satoshi himself. Now, the way and how fast that the asset managers are collecting Bitcoin through the spot ETFs right now should be alarming, because BlackRock already has like over 200,000 Bitcoin. Only took them 1 month. So think about it. BlackRock just achieved what it took MicroStrategy 4 years to accomplish, right? MicroStrategy being the first publicly traded company to put Bitcoin on the balance sheet. In 4 years, they accumulated 190,000 Bitcoin. They spent roughly $6 billion in dollar cost averaging Bitcoin over time, virtually buying all the tops, but still winning. And their stash is now worth roughly $10 billion, giving them roughly $4 billion in unrealized profits. Now, BlackRock's come along in 1 month and surpassed that, which is mind-boggling. And they're just getting started. The ETF inflows right now are roughly 15x the daily issuance being awarded to the miners. There is going to be a Bitcoin halving occurring in 50-something days. So that is going to turn into 50x the supply. And that's just from the top ETF managers on the planet that doesn't take into account retail. Now consider this. Previous Bitcoin halvings like 2020, 2016, and 2012, 100% retail. No institutions, no institutional FOMO, no BlackRocks. In fact, a while back, Mr. Lawrence Fink, the CEO of the largest asset manager in the world, said, Bitcoin's an index for money laundering. Well, guess what? Now he's on board. Now they're stacking sats like there ain't no tomorrow, and they're going to come after all your Bitcoin. They're going to get as much Bitcoin as they can. Here's the silver lining. 80% of the Bitcoin supply is currently in the hands of the long-term hodlers. So shout out to all the long-term hodlers out there, meaning regardless of the price, many of you will never depart with your Bitcoin because you're the smart money, right? You know better. Once you give your Bitcoin to BlackRock, you're never going to get it back. They're never going to sell. They're going to dominate the market, eventually have millions of Bitcoin. There's going to be a massive supply shock. Right now, Coinbase, I mentioned they're custodying BlackRock's Bitcoin from the ETF as well as GBTC, hence why they have over 1 million in their reserves. However, the available supply is at the lowest levels we have seen on the exchanges in like 9 years. There's going to be a supply shock and a demand shock this year. And once you start to calculate not only the institutional FOMO, which is again about to be roughly 25 to 30x the daily issuance after the halving, but also retail, which led the previous all-time high to 69,000, nation-state adoption, countries like El Salvador and Bukele accumulating like madmen. MicroStrategy is going to continue accumulating. Right now, they currently have roughly 1% of the circulating supply. Their goal is to have 5% of the circulating supply, which means they're looking to accumulate 1 million Bitcoin, not just stopping at 200,000. And what about other Michael Saylors that come along and other publicly traded companies that want to put Bitcoin on the balance sheet? What happens when the kingdom of Saudi Arabia smash buys, billions of dollars worth of Bitcoin, or Qatar sovereign wealth fund, currently valued at $500 billion, converts some of that or all of that into Bitcoin? What happens then? What happens when more nation state adoption occurs and game theory continues playing out across the world, just like we're seeing in the ETF markets? Yeah, we have 11 ETFs launched on January 11th officially in the US. But what happens when we get the ETF out of Hong Kong, which is going to be soon? What happens when we get the ETFs out of El Salvador and other countries around the world? You already know, family, I can see 500,000 occurring. That's why it's my bullish target for this cycle. I'll repeat myself, what I shared earlier. My bearish hypothesis for this cycle peak in 2025 is 222,222. And my bull scenario, the bull, is 500,000 per coin, which is right in alignment with what Max Keiser just shared. And I agree with him. I don't trust our government. They're shady mofos. I don't trust BlackRock. I never will. So therefore, note that anything not self-custodied as far as Bitcoin is concerned can be confiscated and taken away from you in the name of national security and be replaced with a CBDC. So with that being shared, fam, let me know your thoughts in the live chat.